Welcome to this comprehensive guide on managing your LLC quarterly taxes in 2026. If you are running a business, you already know that the Internal Revenue Service expects their share of your income throughout the year, rather than in one lump sum at the end. This can feel overwhelming, but today we are going to break down every single detail using real numbers to ensure you stay compliant and keep more of your hard-earned money. Understanding the basics. The first thing you need to understand is that as an LLC owner, you are typically considered a pass-through entity. This means the business itself does not pay federal income taxes. Instead, the profits and losses pass through to you as the owner, and you report them on your personal tax return. However, because no employer is withholding taxes from your paycheck, you must handle that responsibility yourself for quarterly estimated payments. In 2026, the tax landscape has evolved, and staying on top of these deadlines is more critical than ever to avoid heavy interest charges and underpayment penalties. How to estimate your payments. To calculate what you owe, you first need to estimate your total adjusted gross income for the year. Let us look at some real numbers for a typical small business. Suppose your LLC is projected to make $100,000 in net profit after all business expenses are deducted. You must also account for the self-employment tax, which covers Social Security and Medicare. For most people, this rate sits around 15.3%. If we take our example of $100,000, your self-employment tax alone would be roughly $15,300. Next, you must add your federal income tax. Depending on your filing status and other income, let us assume you fall into a 22% tax bracket. After applying standard deductions and the qualified business income deduction, which is a major benefit for LLC owners, your actual effective tax rate might be lower. For this scenario, let us estimate your total federal tax liability at $25,000 for the year. To find your quarterly payment, you simply divide that $25,000 by 4. This gives you an estimated payment of $6,250 every quarter. Important deadlines for 2026. Marking your calendar is the only way to ensure you do not miss a payment. For the 2026 tax year, the deadlines are as follows. The first quarter payment is due on April 15. The second quarter payment is due on June 15. The third quarter payment is due on September 15. Finally, the fourth quarter payment for 2026 is actually due on January 15 of 2027. If these dates fall on a weekend or a holiday, the deadline moves to the next business day. Missing even one of these dates can trigger a penalty that accrues interest daily, which is why consistency is key. How to make the payment. Paying your taxes has become significantly easier with digital tools. The most direct way is through the official IRS website using their direct pay system. You can pay directly from your business or personal bank account without any additional fees. Alternatively, you can use the electronic federal tax payment system, which is highly recommended for business owners because it allows you to schedule all 4 payments in advance at the beginning of the year. This set it and forget it strategy is a lifesaver for busy entrepreneurs who might lose track of the calendar during peak business seasons. Avoiding penalties and interest. The best way to avoid penalties is to aim for the safe harbor rule. Generally, the IRS will not penalize you if you pay at least 90% of the tax you owe for the current year, or 100% of the tax shown on your return for the prior year, whichever is smaller. If your income fluctuates wildly, this second option is usually the safest bet. It ensures that even if you have a massive breakout year, With record profits, you will not be penalized as long as you paid in what you owed the previous year. Remember to keep meticulous records of every payment you make. Create a folder specifically for your 2026 tax documents and save the confirmation numbers for every electronic transfer. If you ever face an audit or a notice of underpayment, these receipts will be your primary defense. Managing your LLC taxes does not have to be a source of constant stress. By using these numbers as a benchmark and staying disciplined with your quarterly schedule, you can focus on what you do best, which is growing your business and serving your customers. The concept of pay as you go is the foundation of the American tax system for the self-employed. When you operate an LLC, you are not just the boss, you are also the payroll department. This means the burden of calculating and submitting income tax and self-employment tax falls squarely on your shoulders. In 2026, the self-employment tax rate remains at 15.3%, which covers 12.4% for Social Security and 2.9% for Medicare. It is important. Remember that you can deduct half of this self-employment tax on your personal return, which provides a small but significant buffer for your taxable income. Building a realistic tax projection. Let us walk through a detailed example using a professional services LLC earning $150,000 in annual profit. To begin your estimate, you must subtract all ordinary and necessary business expenses such as marketing, equipment, rent, and software subscriptions. If your net profit is $150,000, you should immediately set aside approximately 30% of every dollar earned to cover federal and state obligations. For a high earner in 2026, this might mean a total annual tax bill of $45,000. To break this down into quarterly installments, you would owe $11,250 every 3 months. If your business is seasonal, for example, if you earn 60% of your income in the summer, the IRS allows you to use the annualized income installment method. This complex but fair method lets you pay less in your slow quarters and more in your high-earning quarters, which prevents you from draining your cash reserves during months when sales are low. Leveraging the 2026 deductions. One of the most powerful tools at your disposal in 2026 is the Section 199, a deduction, also known as the Qualified Business Income Deduction. This allows many LLC owners to deduct up to 20% of their qualified business income from their taxable income. If we apply this to our $150,000 example, you could potentially exclude $30,000 from federal income tax. This single deduction can save you thousands of dollars and significantly lower your quarterly payment requirements. However, there are phase-out limits based on your total taxable income and the type of business you run, so monitoring these thresholds throughout the year is essential. Payment systems and digital compliance. The Internal Revenue Service has modernized its infrastructure for 2026, making the payment process more integrated than ever. Using the electronic federal tax payment system is mandatory if your total tax deposits exceed certain thresholds, but it is a best practice for everyone. This system provides a digital paper trail that is indispensable during tax season. You should also consider using specialized business banking tools that automatically siphon a percentage of every incoming payment into a separate tax savings account. This automation removes the temptation to spend money that actually belongs to the government and ensures that when the April, June, September, and January deadlines arrive, the funds are already waiting. Strategic planning. To avoid penalties. Underpayment penalties are essentially high-interest loans from the government that you never wanted. To avoid them, you must reach the safe harbor targets. In 2026, if your adjusted gross income for the previous year was over $150,000, you must pay 110% of your prior year tax to be safe. If you fall short, the IRS calculates the penalty based on how much you underpaid and for how long. Even if you cannot pay the full amount, you should always file and pay as much as possible to minimize the interest. In conclusion, managing your LLC quarterly taxes is a year-round process that requires attention to detail and proactive planning. By understanding your effective tax rate, utilizing the qualified business income deduction, and staying disciplined with your savings, you turn a potential year-end nightmare into a routine business process. This financial discipline is what separates sustainable businesses from those that struggle to survive. Take control of your 2026 tax year today and ensure your business remains on solid financial ground.